generation, solar, all the way through wind, geothermal, hydro, etc. We have an approach that has three arms. We have a proprietary electronic trading system, which is designed to match buyers and sellers in a unique way. That's designed to create a level of competition on prices, which can be beneficial for sellers, but it also gives a level of trading flexibility to buyers and allows them to buy what they want. This approach is unique in the market. It's a technology we've developed, and we're expanding it over the coming months. We also match buyers and sellers by telephone, the traditional way. We maintain relationships with the 40 or 50 largest trading counterparties in the market, and we actively work on your behalf as an agent in finding the best deals in the market, whether you're a buyer or a seller. And just to be clear, we don't own any RECs. We don't take any positions. We simply work on your behalf to get the best prices for you that are available in the market. We're a pure agent. We also have a project finance arm as well. We do help project developers find sources of debt, equity, tax equity. We're also very active in the sale and purchase of development rights. We recently closed, last month, the sale of a 5-megawatt project in New Jersey, just to mention an example. We have a background in building trading systems. Most of us come from the capital markets, and we've built our systems directly interacting with the big traders in the market to really meet their needs. I touched a little bit on our services. Just to elaborate a little bit on our technology, it's really designed as an auction format, which matches currently one seller to many buyers, building a level of competition for the certificates that are being sold. Just to give you a sense, we just conducted our first Massachusetts SREC auction at the beginning of February. It was for a total of 9 megawatts, 3 megawatts for 2012, 13, and 14 each. And then we also do bespoke trades. There's a lot of interesting structures in the market in terms of especially accessing longer-term liquidity. We also have trades that can monetize existing REC contracts. So you could have a REC contract from 2 years ago that you're currently receiving payments. We could help you sell that contract to a buyer today for upfront cash. In addition to that, on the project financing side, we have been maintaining a growing Rolodex of investors that are looking to put money to work in the space in different formats. Just to touch on the REC markets, my perspective is a little bit different because we do interact with the Class 1 and Class 2 REC markets as well outside of SRECs. But just to give you a sense, there's 31 RPSs that Yuri talked about, 28 of which are tradable. In addition, there are 71 different types of RECs in the U.S. market. 37 of those are quoted by brokers, so not all of them are even quoted. And then you have 14 solar carve-outs. Just to give you a sense of how the REC markets are growing, these are all RECs. It's growing at about 20% a year. And this is related to how we're stepping up from where we are today in renewable energy to where we're going to be in 2020. So all the different programs, the different regions in the country are growing at different rates. But this all gets a lot bigger, about double the size, if we get a federal policy at some point. Just to give you a sense of some of the market trends in the different RPSs, each market is different. You have a lot of in-state markets where you're not allowed to bring in RECs from the outside, and then you have certain REC markets which do have cross-state fungibility. That's just something to bear in mind. In the SREC markets, it tends to be more in-state programs, and the trend has been to move more and more towards in-state because what happens in some instances is you get a huge production in one state, and if you can bring it into another state, it can actually depress the prices. So what states have been doing have been carving out their programs to be for in-state production only. There are interesting long-term contracts which are being innovated over time. Sol Systems is a market leader in that. There are also a number of utility buyers and very innovative speculators that are willing to get into long-term contracts. It can be a difficult water to navigate and quite complex. Definitely, if you're interested in talking about long-term contracts, that's something we spend a lot of our time on. But you have to be careful because prices have moved around a lot, and there's a lot of bells and whistles that are embedded into these structures. But it is a big trend. And I mentioned the speculators. We are seeing more speculators getting involved in this market. Where are they coming from? They're coming from hedge funds. They're coming from the commodity trading universe. Just to highlight a couple of the issues with the market, some people can go on and on and on about this subject, but the main problem with the market is it's not very transparent. It's very difficult to know what's going on and what's really being transacted. When you look at, say, stocks or foreign exchange, you can get a much better sense of where prices are and how much volume is being transacted every day. SREX and REX, it's very difficult to understand what's going on. Even if you're in the middle of the market, it's hard to know exactly what's going on all sides. This leads to a number of different types of issues. But another thing is that there's really no formal infrastructure right now in how the market works. So in other words, if you wanted to trade a stock or bond, you could probably think of 5 different ways to do it. Well, when it comes to trading an SREC, we're all here to help you, but it's really a market that's in formation stage. We're building some unique technology to help shape that formation, as are the other guys here. One of the core problems in the market that everyone complains about, both buyers and sellers, is that there's a lack of standardized contracts. So this means each negotiation is unique. And as you can imagine, in a market that's growing, that gets more and more complex, and also managing the complexity of the trades that were done yesterday versus 3 months ago and a year ago and in a year from now keeps getting more and more complicated. What do we see in the market? Well, one thing is for sure, it's getting tougher to get financing. There's less capital going around, and a lot of the government incentives are expiring. Of course, the cash grant being the key one, and production tax credit as well. This is impacting the market on all sides for both smaller projects as well as large-scale development. But we are seeing the market on the positive side getting bigger and bigger. There's new entrants, and there's more interesting players getting involved from the financial community. And as the market continues to ramp, at some point, you'll start to break through a lot of those early market growing pains. Just to mention a couple of factors that would help improve the market. I mentioned trying to increase the level of transparency in the market. Part of what we're doing on our platform is really providing back real price information in depth to people that utilize our system, so you get an idea of exactly who is there and how much they were willing to buy and sell and at what price. That's actually quite unique in the rec market. Also, standardization. We are really driving towards greater standardization in the contract. We're working with a number of industry groups on trying to really solve what outstanding issues there still are. You already put up a list of all those points that you need to negotiate. We're trying to whittle that down so more and more is standardized. And then benchmarks. There are no benchmarks in this market. There's no indices. There's really no sense of what's happening overall with the rec supply and demand picture. These are new tools and ideas that are being put out there in the market that could help everyone's understanding. In addition, one thing just to mention, from a commodity trading perspective, these markets are obviously very linked to power. They're also linked to fossil fuels. And we're looking at creating interesting contracts that link the trading of RECs and SRECs with the underlying commodities that they're related to. So what can participants do to help the situation and help make the market better? These are our views, by the way. So use competition to your advantage. Use market forces. These were set up as a market for a reason. When people trade bilaterally, you tend to get in a one-on-one negotiation. It gives both parties a level of exclusivity, but it also hampers the competitive effects of having a market. So I would say use less bilateral trading and get into more competitive processes. In terms of the contractual situation and standardization, seek consensus. Actively try to think of what the other person is trying to do and find a middle ground. We see too many negotiations where everyone starts off on the exact opposite end of the issue, knowing that it's going to get negotiated down to something in the center. And this is counterproductive and a waste of time, and everyone just runs up legal bills. Seek consensus. It's going to do a lot to move the market forward on the standardization front. Also, lobby for stable policies that don't change, and that more RPSs are expanded, and that there's more solar carve-outs. The one positive thing right now across all the RPSs is they are working. We're seeing more and more renewable energy produced, solar being a great example of rapid growth, and they are working within the structures that were put in place for these policies to be implemented and work. And we also haven't seen major impacts on the ratepayer base, which is really what the concern is from the guys that are making the policy. They don't want to see the price of electricity go way up. So, but within the structures, they are working, and stay positive and keep building more and encouraging policymakers to push the policies forward.